Yeah, so what I'm going to show you today is the indicator which has transformed my trading completely. It's on every chart which I open up, no exception. I use it for both swing trading and scalping. I used it yesterday, I used it last week, last month, and I used it this morning to make money in the markets. It has transformed the way I trade. And this is exactly what I'm going to show you today. At the end of this presentation, I hope that perhaps this indicator and this technique, in fact, it's more of a technique, which I will show you, can help you in your trading as well. I will need to start off, and please bear with me, it's not going to take long, with a bit of theory. It is important, it's educational to begin with, but it also is the foundation of what we're going to see later on. Okay, so I'm going to start with landmarks on every chart, then I'm going to explain to you my 3 favorite setups. Then we're going to go to the live markets, and I'm going to show you how an indicator is able to identify these setups and how you can take advantage of this with your trading. Even if you're, it doesn't matter what kind of trader you are, if you trade futures or stocks, or if you're a day trader or a swing trader, this technology will help you, I promise you. And of course, there will be time for some questions later on as well. But let's ease into this. Landmarks on every chart. Now, you probably agree with me that charts can be unpredictable, even chaotic. Let's look at this chart here, where an uptrend, shortly reverses into a downtrend, only then to reverse once again into an uptrend. There's seemingly no pattern, no structure on this chart. Oftentimes, that's the case. And to make matters worse, if you go to these small time frames, say a 5-minute time frame or a 1-minute time frame, things tend to be completely chaotic. Look at this chart here on this 5-minute chart, down, up, down, up, down, up, of no real pattern, no structure around it. But there's a bit of hope. Look at the chart here on the right-hand side. Once you zoom out, and this is your first takeaway for today, for this presentation, once you zoom out, things tend to become a bit more clearer. Once you go to the higher time frames, things tend to become a bit more structured. Look at this chart here. It is not as chaotic as the 5-minute chart. So please keep this in mind, because we're going to use this technique. It's very simple, just zooming out to a higher time frame to find some structure in the market. All right. So, but let's continue a little bit in this theme, because we have discovered that every chart, it really doesn't matter what kind of chart it is. It could be a 5-minute chart. It could be a daily chart. It could be a weekly chart. It could be a stock chart. It could be a futures chart, a crypto chart. It doesn't really matter what it is. Every single chart has what we call landmarks. These are special areas of price on your chart to which, when price approaches these areas, it will react in a certain way. And these are also areas on your chart which have relevance moving into the future. And this is important because in trading, let's face it, let's be honest, in trading, we are trying to forecast what may happen in the future. Okay, perfect. Okay, so let me continue. So every chart has these secret levels of price which have relevance moving into the future. Okay, and I said, let's face it, in trading, we are trying to predict really what is going to happen in the future, where and when price will be in the future. Here's an example. It's oversimplified, but just tries to make the point. So let's look at these levels here on the chart, which were established back in the day, in the past. And you can see how price later on in the future is not only revisiting these levels, like this white line here, for example, but it's also bouncing off this level later on. And these are predictable behaviors of price. For example, this bounce to the downside or this bounce to the upside. These are predictable behaviors of price which have relevance going into the future. And this was a revelation to us because this, as I mentioned before, has completely transformed our trading, because trading is not about trying to figure out, okay, this is what happened in the past. No, it's trying to figure out what may happen in the future. And this is only possible if you have a technique out there which has still relevance moving into the future. It's super important. So please keep this in mind too. I'm going to show you later on how you can find these levels on your own, which have relevance moving into the future. Now, these levels, in fact, we're not the first ones who stumbled over these levels. They have been out there for a while, and they have different names. Yeah. Some may call them support levels or resistance levels or liquidity levels. It doesn't really matter what they call them. What matters is that these levels are out there. Now, you may ask, and this is really drifting up into the theoretical, why do these levels even exist? And this really comes down to supply and demand and excess of supply and demand. So a support level, for example, may be created because demand exceeds supply. And this could be, okay, at these levels, big money buyers are stepping in, pushing price to higher levels. Or when it comes to resistance, supply exceeds demand. It's theoretical to us because us retail traders, we, first of all, don't have the buying power to move the market in a way. What we can do as retail traders is, while the big guys, the culprits, the big money traders, the institutions, they are causing these market moves. They will call the shots, but we can follow the patterns if we can find these levels on the chart. But let me just show you what kind of setups you can spot once you know where these levels are. And of course, I'm going to show you later on how you can find these levels on your own. So what could be some of these setups? And I trade these setups every single day. I trade them this morning with great success. I trade them yesterday, and so forth and so forth, every single time. And these are my three favorite setups. Setup number one is what we call a bounce setup. And I alluded to this a little bit before already. So a bounce setup happens when price comes down to a key level. The importance is that we're coming from the top down to a key level, and then you can anticipate, okay, we're approaching this level. Since we're coming from the top towards this level, it may act as support and will prevent price from moving further down, and instead price will bounce, that's where the name comes up from, bounce to the upside towards the middle, in between support and resistance. We call this the bounce setup. I love this setup. I trade all the time. I traded it 3 times today, this morning already. It's a setup with great reward to risk. Why is that? Because for this particular setup, what you would do is you would put your stop loss just below this level here. You give it a bit of leeway depending on how volatile the market is. You don't want to, and these are not exact sciences. You give it a bit of leeway, a bit of slack, put your stop loss below this level, and then you anticipate price moving, bouncing up this level towards the upper end here. And you can imagine stop loss really nearby, target much further away, great reward to risk. So this is setup number one. I have alerts set up in my trading view for this particular setup every day. I trade on all kinds of time frames. One of my favorite, perhaps my favorite setup. But there's others. Setup number two is what happens actually if a zone is broken. There are no guarantees that a zone will hold. At some point, a zone might be broken and will be broken. But when this happens, a new opportunity opens up to us again. Because in this case, we can trade the breakout. We can enter in the direction of the breakout. For example, here, when we lose support, especially when the overarching trend is also bearish, I'm going to talk about this a bit later. When we lose support, we can anticipate price to continue in the direction of the breakout towards lower price levels. Once again, a great setup with high reward to risk. Because also here you put your stop loss just above this level once the break happens. All right. And one more thing, and this is a bit of a combination of the two. We call this the zone break retrace setup or the breakout retrace setup. It's a combination where we first have the breakout. You can see here price broke, in this case above the resistance level. It continued in the direction of the breakout, and then it retraces, where the name comes from, back to the broken level. And at this point, this level will act as support. Its role has changed. Resistance became support, and this is often a launchpad for price to move further up and for the actual breakout move to continue. Because the breakout retrace setup. It's a mouthful, but these are the kind of setup that I constantly look for. When I say look for, it doesn't mean I'm going through my chart one by one. I have a technology behind this, which will pinpoint to me, which will alert me when any of these setups are present. All right. So, but of course, this whole thing only works. All these really cool setups will only work if we are able to find these levels reliably. If we get these levels wrong, this whole system will not work. Now, these levels, they can be found manually. We have a training course for this about technical analysis, but it's tedious. And I stopped doing this manually because now we have an indicator which will do exactly this for us. It will find exactly these levels for us when applied on the price chart. And this indicator I'm going to show you right now is the only indicator which is always on every of my charts. Now, I sometimes vary indicators. I'm trying to mix them up, try to put different indicators on, but this is the only indicator which is always on my chart, no exception. It doesn't matter what I trade, which time frame I use, if it's scalping or swing trading, this is the only indicator which is always on my chart. It is so important because it helps me so much. We call this indicator the instant charting assistant. Why? Because it does an instant technical analysis of your price chart. It will find these key levels, which give you chart structure immediately once applied to the chart. You can see a little example here. All right. Now, without further ado, this was theoretical until now. Let's check out what this indicator actually looks like live. So let's switch over to the chart. So I'm going to go over to TradingView. This is a platform that we use a lot, but this indicator also exists for other platforms, basically for all major platforms. And we're going to start off. It's going to ease in. It's going to do some commentary on today's market condition. John said when he introduced me, or right before I came on, that the markets are in sell mode, which is absolutely true. We definitely gapped down here, and we might see some further selling along the way today and tomorrow even. John, but of course, trading is always a matter of opinion. I perhaps have a slightly different view on things. Let me explain to you why. So this is the SPY on the daily chart, the ETF that tracks the S&P 500s. All right, so what I'm going to do first is I'm going to switch on the indicator, which is called Liquidity IQ, the indicator which is always on my chart. So I'm going to enable it here. And once enabled, we can see the following. It'll take a second to load. What do we see down here? So we can see that price is coming down. You can see it here to this key level, this red level here. This level is a support level. We are clearly in an uptrend. You can see it here. Prices are coming up. This is a support level here. And I believe this level is likely going to hold. Of course, prices could come down a bit further. That's possible. But I believe this is likely going to hold, and we're going to see some bullish price action afterwards. Why is that? Well, because this is a repeatable pattern. We saw a similar behavior here where price came down to this key support level here. There was even an event called a liquidity capture. I'm going to expand on this a bit later. And then price propelled higher. And now, once again, with today's price action, we came down to this key support level. And I believe, at least if this bullish trend were to continue here, that this level is likely going to hold and we will be seeing higher price levels. So I think this is likely the bottom of this corrective move. The SPY, the S&P 500 is in right now. All right, so this is what I see right off the bat once I apply this indicator here to this daily time frame on the SPY. But there's a bit more. So the indicator finds these key levels for you. You can see it here. But it doesn't stop here. Let me just quickly go to my settings menu here. And I'm going to enable something called mentor mode. So mentor mode is something that typically our students who start off trading with this indicator have enabled. I personally don't use it anymore because for me, I don't need mentor mode anymore. But basically, once enabled, the indicator will actually label for you what you see here. We can see the price is coming down to what? A key support level, a support zone. And actually, this brings up another important point. Don't think of these lines, of these levels as like lines in the sand, as exact prices. These are always zones. Trading is not an exact science. You must give your trade some slack, some leeway. It's always a zone. And depending on how volatile markets are, these zones actually may expand or contract. And how far they go, you can actually see directly here visually on the chart. This box here is your zone. And you can also see it here written up in the label. This zone expands from 646 down here, 646, 83 to 654. So roughly 10 points, a little bit less. That's the dimension of this zone. All right. Okay, so this is mentor mode. And so it finds you these levels. You can see support is down here. Resistance is all the way up here. It's good to know. And we can see how prices had struggled with this resistance level for quite some time now here in the SPY. And what we also see is something called a liquidity capture event. This is actually something which I set my alerts for all the time in TradingView. What is that? So look what happened here. Price came down to this key support level. So once again, this is a bit hard to see, perhaps this little red line here, that's a support level. It started from here, went all the way there. Price came down to support. It couldn't break support. These are always zones. Don't forget about this. Yeah, it couldn't break it. And this candle, which came down to support here, this one here, had abnormally high volume. Once this happens, you first of all see this liquidity capture event here, this little shaded box around it. And oftentimes, that's a sign that buyers are stepping in, driving volume high, because potentially buyers finding, hey, this is a good area to enter into the symbol. And as more buyers are stepping in, prices, as a result, will be driven higher. I scan for these events all the time because there's two things coming together. Prices is coming down to a key level, in this case, a support level, and we have this abnormally high volume. So to me, something where two things are coming together, and I love this bounce trade. You can see it happened down here. It also happened up here. Price came up to resistance. Look here, liquidity capture event, and price came down again because we hit resistance with abnormally high volume. Price was driven down again. All right, so this is the SPY. I'm going to go to some other symbols in just a second, but I want to point out one more thing. Look what you see down here. This is our info box, or our setup box as we call it. It actually tells me what is going on right now this second, which setup is at play right now. And look what it writes down here. Setup, long bounce. Okay, so remember long bounce? Quickly going back to my charts here. Long bounce, where is it? It's this one here. The bullish bounce trade. That's our long bounce. Coming off support, anticipating a bounce towards higher price levels. And remember when I said this setup has great reward to risk? Let's check it out here. Why would that be? Let's just see what you see down here. If I were to trade this setup right now, this second, I would put my stop loss at 641. You can see it written here. My target at 688, just below this resistance level here. And if I were to trade this setup with these stops and targets, I would have a reward to risk ratio of 2.09. You can also visualize these stops and targets by the indicator. You can go here to the settings, just real quick. Okay, and you can say, okay, visualize my targets and stops for me. I enable this, it will recalculate quickly, and once done, you can see these stops and target levels directly on your price chart. So your stop loss at 641, 2.29% off current price, and my target just below this resistance level up here at 688, 4.84 or 82% away from current price, and this will give you a 2.09 reward to risk ratio. All right, so this is how the indicator works, and it works on every single chart. Let me just disable real quick these stops and targets. It clouds my chart a little bit, so I'd like to keep them off. But let's move on. Let's go to the QQQ, the NASDAQ 100 ETF. What do we see here? We also gap down, of course. And once again, also in the Qs, look where we're coming down to. And this is not very surprising, as the Qs and the SPY are often correlated. When one goes up, the other one goes up. When one goes down, the other one goes down. Also here, we are coming down to this key support level. We have a bit further to go. But also the indicator already finds this proximity to this level and also tells you here, hey, this is a long bounce, a setup, gives you stops and targets and your reward to risk ratio. And once again, to me, I believe in these levels. I believe it will hold. And I'm a bit more optimistic, perhaps, than John, that prices are likely to stall out here. And, the overarching bullish trend that the SPY and the Qs are also in is likely to continue. Let's look at Bitcoin. Bitcoin is interesting too. All right, so what's going on in Bitcoin? I have a long-term investment in Bitcoin, but that's not the point. What do we see here? And I want to show you real quick on the chart what you actually can see here. So let me go back here to my slide here. Remember the zone break retrace setup where first a level is broken and price comes back to the level and then it really takes off? Look what we see here. In this case, it's the reverse. Support was broken here. Price went below support, came back up to the former support level, now acting as resistance. Price came down again, once again up to this level and then came down again. These are tradable setups, and I trade them all the time. And they're very predictable. There's no guarantees, of course not, but they are quite predictable. And once again, high reward, low risk, because your stop loss will always be nearby. If you get stopped out, no harm, no foul, it happens in trading. And perhaps you see now how important this indicator is to me, because it gives me these levels. I see exactly where the structure is and how price might react to these structures on the chart. Let's look at some stocks. Broadcom. Stocks that are interesting right now, the second. Broadcom, AVGO. Why? Let's check it out. All right. So what do we see in Broadcom? Well, long bounce. Why? Because price also here is coming where? It's coming close to the support level. I think this could be a great opportunity to potentially enter into a long trend in Broadcom. Yeah, because price may bounce off this level again. Long-term uptrend here in Broadcom. It corrected down. It's available at a discount, and we're finding key support. McKesson, another symbol, which is interesting right now. There we go. This is McKesson. All right, let it load for a second. Also, it says long break here. We broke up above this key resistance level here. You can see the zone break here. Price initially went up, then we gapped down. And where did price stop after gapping down here? At this former resistance level. And once again, I go back to my chart here. Look at this pattern. It's so repeatable. The initial break, we're coming back to the level, and then the move takes off. Doesn't this look familiar or similar? Break above the level, initial move up, down to the level, now acting as support, and then the move takes off. Okay? XLC, another example. The communications sector ETF of the S&P 500. Look what we see here. Right at support right now. Long-term uptrend, price is coming down here to this key support level. Perhaps an opportunity to anticipate, okay, we're going to hold this level, and we're going to see a bounce of this level towards higher price levels. And one more example, XLC, Celestica, a stock which I recently traded with some credit spreads. From a swing trading point of view, beautiful bounce here also from this support level. Volatility is quite high in the symbol. Options were expensive. I put on a credit spread, anticipating that this level is holding, and we're going to see higher price levels. Especially since this symbol also here has been in a long-term uptrend. Perhaps you see now why I like this indicator so much, because it gives me the structure, which is so important. All right, so this was swing trading. Now let's talk about day trading a little bit, and perhaps you can even take some trades today. We'll see. So I'm going to quickly go back to my slides, because there's one more thing I wanted to mention. Okay, so back to my slides. We talked about this indicator here, but, oops, one second. My slides stalled out a little bit. There we go. Okay, perfect. So this indicator has completely changed the way I trade. And as I mentioned before, it's on every of my charts. And let me explain to you quickly how it changed the way I trade. Because back in the day, when I started off trading, that was my initial mindset. Perhaps this is where I completely got off track and donated all this money to the markets. Back in the day, I thought trading should look something like this. This is actually a friend of mine, Steven is his name. He's a very successful day trader. And this is his setup. And I actually programmed many of his indicators, which you can see right here for him. This is how you trade. And there's a YouTube video about this trading setup that's called Day Trading Insanity. And of course, you probably can agree with me. This looks insane. It looks awfully complicated. You probably agree with me. It looks awfully expensive. Imagine having to build this entire tactical setup here of all these screens and all these PCs and machines here. And you also are confined to this little room here all day long with no windows. And I thought, hey, this is trading reality. This is what I would need to replicate. This is how complex trading is. But a few years into my trading career, I now have a completely different opinion, thanks to the indicator I just showed you. Because now I trade like this. Just one screen, oftentimes just one laptop, completely mobile. I trade from all over the world. I'm in Montreal right now for this presentation, but I've been trading from Germany, where I'm from originally, from Brazil, where I travel a lot for private reasons, and really all over the world with this kind of setup. And if you look at the chart here, You see one thing there. You see these lines? This is the indicator, which I use every single day. That's all I need pretty much to trade. And how easy it can be, let me show you right now. Because all I do basically is I set my alerts. So I don't stare at charts all the time. This is very distracting. It's super time consuming, and you basically don't get anything else done but staring at your charts. I don't do this anymore. Instead, what I do are three simple and easy steps. First off, I set my alerts. I'm going to show you in a second how I did this in TradingView, for example. Once the alerts are set, I patiently wait while doing other things, while writing emails, going out, whatever it might be, working on some other things. I get notified whenever an interesting setup comes up. Once I get notified, then I open up my chart. I validate the setup manually. It's good to always have a bit of manual oversight. And if I like what I see, I execute the trade. This is my trading approach right now. It's vastly different from this because this approach here requires you to stare at your chart all day long to look at certain things manually. It's, for most of us, not feasible because we all have busy lives. We have regular jobs potentially, do other things. We don't have the luxury of time to look at charts all day long. Instead, what we want is you want to get notified when something of interest pops up, and then check out the chart and then trade. Now, how do I do this? How do I set up my chart this way? So I'm going to go back now to TradingView. I'm going to switch gear a little bit. We talked about swing trading here. Now I want to talk about day trading. Because in swing trading, you place your trades perhaps once a week or maybe once a day, whatever it may be, and when the market opens, and you're done with it. But this is one trading style. There are other ways to trade. What about day trading? All right, so I'm going to switch gears now. I'm going to switch down to the smaller time frame. And the first thing I'm going to show you is a couple of trades I took this morning. And they were extremely small time frames. Let me see, what did I trade this morning? So I'm going to go here, if I can find my trade panel. Just 1 second, guys. Just going to log into my Interactive Brokers account. I'm trading. These are my trades from this morning, just before I started my presentation here. And they were all extremely short-lived. Every trade which I took perhaps lasted maybe 10, 15 minutes. Complete scalping trades. But guess what I used? I used the exact same indicator on my chart with the help of one other indicator, which I'm going to get to in a second. All right. But first of all, let me show you how I set everything up. So what I do is I typically, for day trading, have 3 time frames open. I have the 15-minute time frame here, this one. I have the 5-minute time frame, this one here. Let me just hide this indicator for a second. And I even have the 1-minute time frame. And the trades I took this morning, this is the 1 minute. The trades I took this morning, they were, I believe, all on the 1-minute time frame. They lasted only a couple of minutes. How did I find these trades? Now, let's switch here to the alerts tab in TradingView. You can see this little icon here. Oh, only today, we already had 37 alerts. It may sound a lot to you, and there's ways to filter them down a bit further, but you can see these are the alerts that are coming in. And I define my alerts, not just for futures, this was mostly day trade futures, but also for stocks, for all the S&P 500 stocks. All these alerts are coming in. You can see here, alert, 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 alert. These are coming in at certain intervals. I will be notified either directly in TradingView or perhaps on my cell phone app right here. I see the alert coming in. I open up the chart, and if I like what I see, I execute the trade. I do this every single day with great success ever since. So some of the trades I took this morning. Let me just quickly go here to 6J. Yeah, Japanese yen. I took a trade here. Let me just quickly see when this one happened on the... just give me 1 second, guys. Let me just go here to this chart. Where do we have the Japanese yen? There we go. Just to show you what is the kind of duration of these trades. Here, that was this morning. Quick trade, in and out, closed it down here. These are scalping trades. I'm not hanging on to my trades. These are quick trades, which I like to do when a certain setup comes up. I found the setup here on the Japanese yen on the 5-minute time frame. Very small time frame, in and out, because I don't want to be stuck in something like this. I'm going short here, for example. Price eventually will rally up because perhaps the overarching trend is up. and I'm a big loss. No, these are hit and run trades. You get into the trade quickly and you get out of the trade very quickly for a small profit. But these are repeatable processes based on the levels on my chart. What I would like to do today in this presentation, I'm going to be waiting for some of these setups to come in. I want to be alerted. And once they come in, we're going to open up the chart, okay? And then we will execute the trade. But before we do, I'm going to show you some of the some of the symbols that we could trade today. Let's start with the Nasdaq futures. What do we see here? All right, so this is the MNQ, the micro Nasdaq futures. My indicator is on the chart. Let me just quickly see once it loads. And we can see here, all right, what do we see? This is on a 50-minute time frame. Price broke below support. You can see the little zone break level here. We lost support, okay. And once again, guys, just look how this looked like here. These patterns are so repeated in the future. This screenshot here I took maybe a couple of years ago. We broke support, price initially goes down, it came back up, and where did it stall out? At the broken support level, and then it continued its move further down. Now let's contrast this with what you see here. I mean, it's uncanny. We broke support, price initially goes down, it comes back up. Where does it stop? It's like magic sometimes, directly at this broken support level, now acting as resistance. These are, and then the actual move continued on the small time frame here. These are highly predictable setups, which I trade over and over again. And trading is a numbers game. Not every of these setups will work out. Of course not. It's impossible. But over time, I believe you will have a statistical edge using the right indicator and being able to identify where these levels are on your chart. So this was MNQ. Let's look at oil. I'm not sure what happened in oil here. I haven't looked at it today because I didn't get an alert for oil. But let's just check out what's going on with MCL, micro crude. Oh, we just got an alert here. I'm going to go to this one in a second. Yeah, oil came down here to support, bounced off support, came up to resistance, struck with resistance, came down again, went slightly up, and it's kind of struggling with this resistance cluster right up here. Probably a setup I would not trade right now. It's a bit all over the place, a bit sideways, but if you were to take a shot, I definitely would play the bounce trade here. Coming up here, anticipating, okay, this level is likely to hold, and price may bounce off this level towards lower price levels. But I would wait. We're still too far away here. I would wait for price to come perhaps up to this level here, then potentially look for a short trade, anticipating, okay, price might bounce off from this level towards lower price levels. All right, but we saw an alert coming. Let's check it out. On MET, this is micro Ethereum. All right, a futures contract. On the 50-minute time frame, we had a support liquidity capture. Let's check it out. I'm going to click on this alert here. And this is exactly my workflow. Let's see what happened. All right, so the indicator is loading. There we go. Okay, and we can see where the price come down to this key support level. And on the last candle, we had this liquidity capture event. Remember that event where price comes near level and has abnormally high volume? This is what we're seeing right now. And I love these setups because two things are coming together. Well, at a key technical level, and for some reason, volume is spiking up. So something is happening. And this could be interpreted as, hey, perhaps somebody else will find this current price level here where prices are right now of interesting, perhaps good time to get into a long position, driving price higher up in the process. Now, would I trade this particular setup right now? Myself, let me just quickly have a look what else is going on, because I like to trade when the odds are truly stacked in my favor. And for this, oftentimes, not always, there's exceptions, but oftentimes I only take a long trade in this case if the overarching trend is also bullish. So how do we know whether the overarching trend is bullish? Well, we could eyeball it. Say, okay, this looks somewhat bullish. Or once again, I like to, I like indicators to do all the heavy lifting for me. We're just going to apply another indicator here. But this is our trend indicator called MA Rush. I'm going to apply it. This indicator, once applied, will tell you what is the current momentum. Give it a second to load. It's loading. Oh, okay. We can see here, momentum was bearish. then bullish, this big bull label here, and then it became bearish again. And to me, this is not ideal because this bounce setup here, even though it may happen, there's no guarantees, it would go against the momentum direction. And oftentimes that's the case because for bounce up to happen, it probably needs to come down first. But sometimes you actually have confluence. You see a long bounce trade and the momentum is still bullish. This is when I really, truly want to execute my trade. This is how I further filter down my alerts here. Because then three things are coming together. We're nearing support, we have this liquidity capture event, and the momentum would still be bullish. We're still trading with the trend rather than against it. Okay, so here I wouldn't go long right now, but should this level fail, we can wait for this, should this level break down to the short side, then I'm going to be all ears. Because then a short trade is become much more interesting. Because then we would trade with the momentum. We're going to go short, and we are bearish to begin with. Two things coming together. It's a confluence trade, and this is how I look at the market. I like to trade when things are stacked in my favor, and I am patient now. I never was patient back in the day, but now I'm patient because you can see how many alerts are coming in. I don't need to trade every of these symbols. Of course, that would be foolish to do. I will only trade the setups where things are coming together, where I really like the setup. Okay. Now let me talk a little bit about this indicator that you see on the chart here. It's called ME Rush. It's another indicator which is always on my price chart. How does this one work? Let's go to the Russell, because I want to show you something. So M2K, the micro Russell future. I'm going to hide real quick the other indicator, Liquidity IQ, on the chart. What do we see here? Well, look at this. We see these labels on the chart. You see this one? Bearish, bullish, bearish, bullish, bearish, bullish. And see these subsequent price move oftentimes afterwards? The indicator picks up changes in regime and momentum, whether we go from bearish to bullish or vice versa. And we have traders in our trading room which exclusively, they don't care about the levels. I care about the levels, but not everybody has the same trading style. They exclusively trade along these levels here in a stop and reverse fashion. Whenever we have a bearish label, they short. We get a bullish one, they cover and go long. Bearish, short, cover and go long, and so forth and so forth. And this works. We've back tested this. You can trade just like this, and you have an edge in the market. I personally don't do it because I think the edge can even be bigger by combining this information with our key levels on the chart. But hey, everybody can have a different trading style. So this indicator is called MA Rush, and together with Liquidity IQ, we call this indicator, let me just quickly go here, the dynamic duo, because MA Rush will give you these momentum directions, the trend direction. And in trading, it's always better to trade with the trend rather than against it. Why? Because you probably have heard it. The trend is your friend. Yeah, it is more likely that the trend is going to continue than the trend to reverse. And why not take advantage of this insight? And together, Liquidity IQ and MA Rush, we call this the dynamic duo because they complement each other so nicely. And the way I use them is I wait patiently for a confluent setup where we have all three things coming together. We are facing, or we're coming down to a key support level. We do have a liquidity capture event, so two things, and the momentum is also bullish. As per our MA Rush indicator, if these three things are coming together, then I execute my trade almost all the time. I still eyeball the chart. If it's too chaotic, too crazy, I may stay away. But this is typically what I do. It's very repeatable. It's actually quite mechanical. It's the beauty of it. It doesn't, you don't need a PhD in finance to trade this setup because most of the heavy lifting is actually done for you automatically by these two indicators.